Hey there, future financial wizards. Today, we're diving into the world of lazy investments. Yes, you heard that right. Imagine building wealth while lounging on your couch, binge watching your favorite series. We'll cover everything from index funds to robo-advisors, and even some automated savings apps that do the heavy lifting for you. Let's get started. Before we jump into the specific types of lazy investments, let's break down what they actually are. Simply put, lazy investments are strategies designed for minimal effort while offering the potential for solid returns over the long haul. Think of it like this. You're not trying to time the market perfectly or spend hours researching individual stocks. You're looking for ways to put your money to work smarter, not harder. We're talking about the set it and forget it approach to growing your wealth. First, they're generally low maintenance. This means you don't need to constantly monitor the market or make frequent adjustments to your portfolio. Second, many lazy investment strategies involve automatic contributions. This is huge because it takes the emotion out of investing and helps you stay disciplined over time. So, if you're ready to ditch the stress of active trading and embrace a more hands-off approach, lazy investments might be just what you need. Let's face it, buying a rental property isn't exactly the most accessible investment. Between the down payment, repairs, and finding tenants, it can feel more like a full-time job than a passive income stream. But that's where real estate crowdfunding comes in to shake things up. Platforms like Fundrise, Realty Mogul, and CrowdStreet have completely changed the game, making it possible for anyone to invest in real estate with just a few clicks. We're talking about fractional ownership in commercial properties, apartment buildings, even those trendy tiny homes you see all over Instagram. The best part, you don't need to be a millionaire to get started. Some platforms let you invest with as little as $500, allowing you to diversify your portfolio without breaking the bank. Plus, with real estate crowdfunding, you get to skip the headaches of being a landlord. These platforms handle all the management and logistics, leaving you free to enjoy the passive income rolling in. But overall, if you're looking for a hands-off way to tap into the potential of real estate, crowdfunding is definitely worth exploring. Alright, let's talk about one of my favorite ways to build wealth lazily, dividend stocks. Now, I know what you're thinking. Stocks? Isn't that risky? And you're not wrong, stocks do come with their fair share of volatility. But here's the thing about dividend stocks. They're like the responsible older sibling in the investment world. These are established companies with a track record of profitability who choose to share a portion of their earnings with shareholders, typically on a quarterly basis. Imagine this. You buy shares of a company like Coca-Cola, Johnson & Johnson, or even a tech giant like Apple, and every 3 months they send you a check just for being a loyal shareholder. That's right, you literally get paid to own a piece of these companies. Now, dividend payments aren't guaranteed. Companies can choose to reduce or eliminate dividends altogether, especially during tough economic times. The beauty of dividend stocks is that they offer a two-pronged approach to building wealth. You have the potential for your investment to grow over time as the stock price appreciates, and you also receive regular income in the form of dividends. Spread your investments across different sectors and industries to create a well-rounded portfolio that can weather market fluctuations. Let's be real, managing your own investments can feel intimidating, especially if you're not a financial expert. Who has time to research different asset classes, rebalance their portfolio, and stay up to date on market trends? Well, that's where robo-advisors come in to save the day. Think of robo-advisors like the autopilots of the investment world. Platforms like Betterment, Wealthfront, and Acorns use sophisticated algorithms to automate the entire investment process, taking the guesswork out of managing your money. You sign up, answer a few questions about your financial goals, risk tolerance, and time horizon, and the robo-advisor takes it from there. They'll create a diversified portfolio tailored to your specific needs. Invest your money in a mix of low-cost index funds and ETFs, and even automatically rebalance your portfolio over time to keep you on track. It's like having a personal financial advisor at your fingertips, but without the hefty fees. Plus, robo-advisors typically have low account minimums, making them accessible to even beginner investors. Some offer more personalized services than others, so it's essential to do your research and compare fees, features, and investment strategies before choosing one. But if you're looking for a truly hands-off approach to investing, robo-advisors are definitely worth considering. In the world of investing, there are two types of investors: those who try to beat the market and those who aim to match it. Consistently beating the market is incredibly difficult, even for seasoned professionals. Consider index funds and ETFs for a lazy yet effective strategy. They offer a smooth and steady ride. Index funds track market indices like the S&P 500 or the Dow Jones. ETFs trade like individual stocks. Both offer instant diversification and low costs. For a set it, inichi, and a forget it, amitit approach, index funds and ETFs are worth exploring. Now, I know what you're thinking. High interest savings accounts, aren't those like the opposite of exciting? And you're not wrong. They're not exactly going to make you rich quick. But here's the thing. High interest savings accounts are the responsible, reliable friend in your investment portfolio. They offer a safe and secure place to park your cash while earning a higher interest rate than traditional savings accounts. Instead of letting your money sit in a traditional savings account, earning a measly 0.01% interest, you can put it in a high-yield savings account and earn a significantly higher rate. Now, it's important to shop around and compare rates from different banks and credit unions. And while high-interest savings accounts won't make you a millionaire overnight, they're a great option for short-term savings goals, like an emergency fund, a down payment on a house, or even that dream vacation you've been eyeing. Plus, having a healthy emergency fund can give you peace of mind and prevent you from going into debt if unexpected expenses pop up. It might not be the most glamorous investment, but it's a crucial part of a well-rounded financial plan. To wrap things up, we've explored 6 fantastic lazy investments that can help you build wealth with minimal effort. From real estate crowdfunding and dividend stocks to robo-advisors and high-interest savings accounts, each option offers unique benefits tailored for busy individuals like you. Remember, the key to financial growth is taking action. Whether it's setting up an account, investing in index funds, or exploring peer-to-peer lending. Now that you're equipped with these insights, it's time to put them into practice. Check out the links below for more insights on wealth building. If you found this video helpful, don't forget to hit that subscribe button, give us a thumbs up, and share it with friends who could also benefit from these investment strategies. Let's take those first steps together toward a wealthier future. Happy investing.